Fpsc Senior Auditor Test Important MCQs. 1. A company is owned by its A. Directors, B. Managers, C. Shareholders, D. Employees. 2. Shares of listed companies are traded in the A. Stock exchange, B. Option market, C. Future exchange, D. None of these. 3. What from the following is an integral part of business? A. Profit, B. Risk, C. Certainty, D. Profit and risk. 4. A company sold goods of worth Rs.1 million. The manufacturing cost of the goods were Rs.600,000. The transport used in the sale cost Rs.100,000, and the wages paid during the process of sale were also Rs.100,000. What is the gross and net profit? A. Gross profit equals Rs.600,000 and net profit equals Rs.400,000. B. Gross profit equals Rs.400,000 and net profit equals Rs.600,000. C. Gross profit equals Rs.200,000 and net profit equals Rs.400,000. D. Gross profit equals Rs.400,000 and net profit equals Rs.200,000. 5. Every transaction has the effect A. Zero, B. Single, C. Double, D. Triple. 6. The main source of generally accepted accounting principles is R. A. Company law, B. Accounting standards, C. Both A and B, D. None of these. 7. What standards are used to prepare financial statements by most of the countries and companies? A. International Financial Reporting Standards, B. International Financial Accounting Standards, C. International Accounting and Auditing Standards, D. International Risk Reporting Standards. 8. The correct form of accounting equation is A. Assets plus liabilities equals equity, B. Assets minus liabilities equals equity, C. Assets minus receivable equals equity, D. Assets plus receivable equals equity. 9. A company sold goods worth $5,000 on the 5th of June and $10,000 on the 28th of June. The company received the first payment on the 25th of June and second on the 7th of July. The company prepared the financial statement on the 30th of June. What would be the total sale on the financial statement? A. $0, B. $5,000, C. $10,000, D. $15,000. 10. Advance payments are recognized as A. Receivable, B. Payable, C. Bad debt, D. None of these. 11. What from the following is not a current asset? A. Patent rights. B. Inventory. C. Cash. D. Trade receivables. 12. What from the following is not a non-current asset? A. Capital. B. Property. C. Patent rights. D. Inventory. 13. What from the following is our not tangible asset? I. Patent rights. 2. Goodwill. 3. Land. A. I only. B. Two only. C. I and two only. D. I, 2 and 3. 14. A machine price was $1,000 and was carried through a truck. The truck's fares were $500. The engineers charged $500 for the installation. The cost of the machine is A. $1,000. B. $1,500. C. $2,000. D. $2,500. 15. Depreciable amount equals A. Cost of an asset plus residual value. B. Cost of an asset, residual value. C. Residual value, cost of an asset. D. None of these. 16. The accounting process of allocation cost of intangible assets is called A. Amortization. B. Depletion. C. Going concern. D. Residual value. 17. The process of recording consumption of natural resources is called A. Amortization. B. Depletion. C. Going concern. D. Residual value. 18. The concept that the enterprise will continue in the foreseeable future is known as A. Amortization. B. Depletion. C. Going concern. D. Residual value. 19. What from the following is not a capital expense? A. Purchase of property. B. Purchase of office equipment. C. Replacement of a vehicle. D. Repair of a vehicle. 20. An item of equipment costs $300,000 and has a residual value of $50,000 at the end of its expected useful life of 4 years. What is the depreciable amount? A. $50,000. B. $250,000. C. $300,000. D. $350,000. 21. The expected disposal value of the asset at the end of its expected useful life is called A. Residual value. B. Net book value. C. Depreciation. D. Substance over form. 22. The figure that appears in the statement of financial position after the depreciation is known as A. Depreciation. B. Substance over form. C. Residual value. D. Net book value. 23. Which from the following asset is not depreciated? I. Advances. 2. Land. 3. Machinery. AI only. B2 only. CI and 2. D2 and 3. 24. Depreciation is normally charged as A. Payable. B. Receivable. C. Expenses. D. Advances. 25. A company purchases a non-current asset in year 1 for $90,000. The depreciation charge is $15,000. What net book value would be recorded in financial position statement at the end of year 2? A. $75,000. B. $60,000. C. $30,000. D. $15,000. 26. All procurement opportunities over rupees should be advertised in the newspaper. A. 0.5 million. B. 1.5 million. C. 1.5 million. D. 2.0 million. 27. The procurement opportunities over 2 million rupees should be advertised in at least newspaper. A1. B2. C3. D4. 28. The principal method for the procurement of goods, services and works is A. Open competitive bidding. B. Close competitive bidding. C. FIFO. D. LIFO. 29. The bidder with the evaluated bid shall be awarded the procurement contract. A. Highest. B. Lowest. C. Average. D. Zero variance. 30. Where needed, the procuring agency shall require the successful bidder to furnish a performance guarantee which shall not exceed of the contract amount, A. 5%, B. 7.5%, C. 10%, D. 12.5%.